the name of the values that keep you alive. Do not let your vision of man be distorted by the ugly, the cowardly, the mindless, and those who have never achieved his title. Do not lose your knowledge that man's proper estate is an upright posture, an intransigent mind, and a step that travels on limited roads. Do not let your fire go out. Spark might replace the spark, and the hopeless swamps of the approximate, the not quite, the not yet, the not at all. The world you desired can be won. It exists. It is real. It is possible. It's yours.
Hey guys, welcome back to the Cryptoconomy podcast. I want to thank you all for being here. I'm here with Isaac Martinez. Thanks for being here so much, Isaac.
Hey, thanks for having me.
Yeah, absolutely, anytime. So, Isaac has a long background in Forex markets, which is something we haven't talked about too much. We've touched on it a little bit, but I think it's really important to talk a little bit about Forex because crypto is in sort of uh, a weird spot in between Forex, equities, other financial markets. So it's helpful to understand all parts of the financial system when you're trying to figure out where cryptos fit in. So what initially drew you to Forex markets, Isaac?
Actually, I don't know if it was I got drawn to it. It was by happenstances. My father was actually an early pioneer in the FX space, and my father at the time was trading Forex, and I had no clue what it was. But I remember going into our garage growing up, and before computers had charts like they are today, he was running every individual screen, doing screen captures and taping it against our garage from wall to wall, and that's how he was looking at trends
Oh,
and
wow.
markets and time frames. So it wasn't until I got a little older and I started just changing between jobs at high school. My dad's like, "Hey, come into the office, I'll give you some work," and that kind of started my journey as employee number 3 at the time of Market Traders Institute. And before I knew it, here we are, 18, 19 years later. I'm actively involved in the FX market and financial trading for that long.
Okay, so yeah, you were essentially born into it. That makes a lot of sense because, initially, I feel like getting into Forex can be kind of hard unless you have someone who's helping you, teaching you the ropes. 'Cause it took me forever to figure it out. I mean, once I did, it all makes sense, but it looks like complete jargon beforehand. So
Yeah, it's a lot easier today than it was, 18, 19 years ago. And really kind of that's how I felt initially as getting into the crypto space is probably how people were feeling like getting into the Forex space.
yeah, no, exactly. So we'll get into crypto. I just wanted to start a little bit with background on Forex, and then we'll do a little background on what you've done within Forex, and then go into what you're doing with crypto now, I think. So, how would you say that Forex really differs from equities markets as far as how you go about trading, analyzing, or even starting a company around it?
I mean, they're really an apples and oranges type of asset class that you're trading. While trading fundamentally is the same, right? You still have market orders, entry stops, entry limits, and the same basic principles. The underlying asset class couldn't kind of be different. And some of the main differences is how the basic person trades. The average trader or self-directed or retail trader in stocks isn't actively using leverage. They buy one certificate of stock or Apple. On the Forex side, almost everything you do is leverage. So as a basic trader, you're getting in the US, for example, regulations allow 50 to 1 leverage. So every dollar controls $50 in buying power. If you're trading internationally, you have 200 or even 400 to 1 leverage. One of the other unique things there's several unique things, but another unique thing about Forex, the stocks, is the convenience and time. So the stock market opens up at 9:30, closes later in the afternoon. And runs its 7 hours or so of opening. The Forex market runs 24 hours a day, 5.5 days a week. So convenience-wise, it's a lot easier for the average person who's running a day job to get access to trading currencies because they can kind of trade around their time or their schedule, whether that's early in the morning for a lot of people that get up the middle of the lunchtime or even in the evening when they come home. It becomes kind of their side hobby or their side business as they're getting into. Uh, there are obviously some other differentiators between the two, and one of them is just pure size. I mean, the Forex trades uh, $3 to $5 trillion a day, so it's a monster market place with retail volume making up about 20% of that total volume at this point. So very similar fundamentally as far as trading, but couldn't be different as far as the underlying asset class that you trade.
So, I mean, it is such a massive market, and one thing I found so strange was that, up until I guess it was almost the end of high school, I'd never heard of it. So, why do you think Americans specifically are so ignorant of Forex markets and tend to shy away from them? Because I know in London and the EU, it tends to be much more popular.
Yeah, Forex is more widely known, as you kind of alluded to, internationally than it is in the U.S. And part of that goes just to the basic culture of the economies. Here in the States, to travel, we go from Florida to Georgia to North Carolina to Texas to California, Chicago, and we have the US dollar. And a lot of people in the States don't even travel abroad, so they never run into any exchange rates. Over throughout Europe, especially before the euro came into play, I mean, if you were just crossing a border, you're instantly having to exchange your currency. So generations and generations, people have been very aware of how much their currency value is worth another. Now, that's just crossing the border from a tourist perspective. Now, take that up another layer when you're actually a business owner and you're crossing business to business, and now you're having to import your goods from other countries. You're having to sell to other countries. You're very, very aware of what the exchange rates are, and kind of it's just ingrained into you and ingrained into the culture. And then you take it all the way over to another example of that is over in like Japan, who's had virtually 0% interest rates. And the Japanese have, as part of their culture, multiple accounts of different currencies. So they have Japanese accounts, they have base accounts, they have US dollar accounts, they have euro accounts, and they are moving their money from account to account, playing both the exchange rate and also the interest differential rate. So again, it's built into the culture.
Yeah, so I guess when you're so aware of, how often this is happening, I think so many people go throughout their lives without even thinking about, how exchange rates are actually determined. Certainly, that was not something I thought about. So what would you say, for people who really don't understand this stuff, how is the price of a currency really decided?
So the number one and the biggest driving factor of currencies that most people don't know is interest rate differentials. So the
Yeah.
difference of the interest rate between the U.S. economy and the Australian economy. The interest rates government has at the time is kind of an indication of the strength of their economy, and those are the big drivers that are kind of the true underlying movers of the big fundamental shifts and swings in the marketplace. Outside of interest rate differentials, most traders like myself are very technical driven and technically minded. So we become technical traders. And then while we're looking things off of trends and other patterns within inside of the market.
Yeah, and so that's a great segue into more technical trading strategies. So I'm sure most people who've tried to get into trading have seen, charting up in certain places. But I think most people really don't understand how to read the charts. So could you talk a little bit about, what charting is and how it came to be and how you guys have tried to make it easier?
Yeah, so a lot of people enter the market in currency trading and they start generally by trading fundamental announcements. And that's been an evolution within inside of the marketplace. And now you trade fundamental announcements and spreads go really wide to discourage people from trading. But a lot of people get in and they get their butt kicked trading fundamental announcements because it's a very difficult time to trade the markets right after, for example, non-farm payrolls. The markets may
Yeah.
move hundreds of pips. And in that moment, it's a great volatility and lots of volatility, but there's so much slippage around it that it's really not a great profitable strategy, and a lot of traders learn that quickly.
Yeah.
After you get outside of fundamental announcements, the next kind of evolution for traders is they then generally will try to get into indicators, and they're looking for that easy button where they're trying to say, if I can add this magical leading indicator, and when the red line crosses the green line, I buy or sell, and that's all I have to do. Uh, and they put some basic rules to around it. It starts to work briefly, and then the market conditions change, and then they get beat up around there. And I see that happen a lot. And really, what after the average trader goes on this journey of how to build their trading style, most traders that trade Forex end up and land kind of as a technical trader. And what I mean by a technical trader, they're using technical analysis to make their trading decisions. So, for example, someone like me, I'm someone who looks at the market and I read candlestick formations. I'm all about trend lines and some basic rules. The trend is your friend until it bends.
Yeah.
I'm heavily rely on support and resistance. The kind of the core principles built around my trading is using Fibonacci's, which a lot of people misunderstand and don't know how to use. So what I'm looking for as a trader is multiple levels of convergences in the marketplace, that I have a trend line break at a candlestick formation at a Fibonacci bounce, and it's showing me at that point, what I mean is I have a higher probability for success in that particular trade. And so as kind of we always say, the candlesticks are the sign language of the market, right? They don't scream at you, but if you can look at them, that you can decipher them, and they can tell you what they're trying to say. So what we do and how we leverage our charts, knowing that we're technical traders, and most traders are ultimately become technical analysts, is at Smart Trader we have introduced a whole line of smart tools, and so we make it a whole lot easier for traders to identify trend lines. So you can simply click at the high or the low, and trend lines will be automatically drawn for you with complete accuracy. You can, again, place a higher low and will automatically draw Fibonacci levels for you and show you the active Fibonacci's, pivots, support and resistance, candlestick formation. So it's our kind of mission to bring the advantage back to the trader and to help traders make better, faster, smarter trading decisions. And we're leveraging the latest and greatest technology to help traders do that.
Yeah, I feel like a lot of people try to get started in Forex and they get stuck in something like binary options. They lose a bunch of money and then they never come back.
Yeah,
Um,
I mean, there's so many life lessons that unfortunately it's like so many traders don't know where the landmines are,
yeah.
and only have to go through some real life experiences where, like you said, binary options, the latest and greatest, and 97% of everyone that gets involved in
Yeah,
binary options
essentially
loses.
just gambling with probably less luck than Vegas, honestly.
Yeah, absolutely.
So when people are trading in different time frames, I think that's something that kind of separates this from equities markets a little bit, is that people are trading in vastly different time frames and they're charting very specifically to those time frames typically. So could you talk a little bit maybe about the different kinds of traders and how some people are trading within time frames a little differently?
Yeah, we kind of bucket the trader profile to several different types, and they all use a variety of different time frames. So you have your investor, and one of the big differences, people that trade stocks, a lot of them are investors, not necessarily traders or day traders, and a large part is just by the day trading rules that the stock market has. And most investors, they're looking at daily charts, they're looking at weekly charts, the bigger movements. Then you have kind of your swing traders. Your swing traders go a little bit lower in the time frames. They're going to be in the 4 to 8 hour time frames. They're looking at the different swings of the marketplace. They're going to be in for a longer periods of times. They're not in for months. They may be in for days or weeks. Then you kind of get down into your day traders, and your day traders are really looking at the market probably from the most holistic perspective, where they're looking at day charts to determine market direction. Then they're jumping down to a 4 hour to see the kind of intraday market. and set up potentials. Then they're down on an hour using technical analysis, finding current trading opportunities. So when trend line breaks are happening at when the market is whether overbought or oversold on stochastic or MACD or whatever other indicators and different levels of technical input they're using to make their decision. And then from an hour, most traders will jump down to about a 30-minute chart or a 15-minute chart for their entry. So they're trying to turn around and find the optimal entry. How do they get ahead of waiting for, instead of a 1 hour candlestick to close, they're on a 15-minute or 30-minute chart. You can get in quicker. You can see the opportunity and the buyer sell signals faster on those smaller time frames. The last two groups of traders, as I liken them to, are scalpers and algorithm traders. So the scalper, those guys are living from the 30-minute to more likely in the 10, 5, and 1 minute time frames, and they're looking for just a few
Adrenaline
pips.
junkies.
Yeah, they're just trying to get in and out, and they're trading all day, relentlessly. And then you have the algorithm guys. The algorithm guys are looking for alpha. They're looking for the edge on the market, and they're running their algorithms and they're in for milliseconds of time, and that's some super sophisticated stuff.
So, what's your opinion on things like algorithms? Have you really found any success? I mean, I played with a bunch of them, never quite made it work. But I'm wondering, do you think any of the sort of offshoots of Forex have really worked well for people? Things like copy trading and algorithms and stuff like that?
Yeah, there's definitely algorithms out there that are really, really good. We have a few of them that absolutely have proven to have an edge on the market, but unless you can dumb luck into it, they're really hard to find. It takes an incredible amount of brain power to get that edge. For example, we have one. It's 100%. I have myself about $700,000 on it, and for it on average probably has brought about 30% a year on real money, and it has a proven edge. It has trades 24 hours a day, always has positions, and it's a great tool. We have probably 2 or 3 other ones that have proven edges as well. And then oftentimes the average person, you find great systems and they work great for market A. So they build a system for market A, it has an edge in market A, but when market B turns and they're deploying system of market A, that's when their systems really start to not become profitable. And there's a variety of things that can happen for that, drive the market to change. For example, recently in the Forex side, volatility just started picking up. So the average daily trading ranges went from, depending on your instrument, 75 to 125 pips to 150 to 225 pips. And if you are deploying an algorithm that was great for low volatility times and low trading ranges, when the market conditions changed, your algorithm kind of blew up on you. So being able to know what algorithm to run, it's kind of like being and to successfully trade different systems and algorithms, it's kind of like being a great coach of a basketball team. You have your star players, and you got to know when to play them, and you got to know when to pull a player out and when to put a player in, and that's what a trader needs to do. Knows when to deploy an algorithm or a system on a specific market conditions, and be able to recognize when that market condition is changing. You have to turn around and run another system.
Yeah, I think that's what makes Forex pretty interesting is, there's so many strategies, so many avenues you can go down to, get the end result. So people have a lot of creativity in how they go about whatever they're trying to do. I think some of that is a little lost in equities. It seems like a lot of people are just following the same strategies for the most part. So I was going to ask, how Market Traders Institute and Smart Trader address some of these things, how they the different projects differed, and what you learned from each to roll into the next, I guess.
Yeah, so we always say for a trader to be successful, you really need 4 things. You need a trading account, you need an education and a strategy, premium charting and tools, and mentorship. And as you alluded to at the start of the interview, you were saying as you got into Forex, you didn't really know where to go and what to
Yeah.
use and where to look at. And that's really where the mentorship comes in. The part we play in that path is on Market Traders Institute side, we are the education and teach you the strategy. And then probably what's more valuable after you understand technical analysis and the strategy is the mentorship. It's interacting with the years and years and years of senior traders that we have as experience to help guide you through the market, to help you so you're not stepping on and help you avoid as many landmines as possible. And where are the opportunities, helping you identify where the opportunities, help you to identify the pitfalls to stay away, all the temptations of, hey, I'm going to go, get this easy button, and on non-farm, I'm just going to straddle the market, and no matter what happens, I'm going to make it and get paid. Well, it doesn't kind of work like that. Here's this simple algorithm over here that somebody's telling me. So our mentorship really comes in the long-term success of traders. Where Smart Trader comes into play is on the premium tools and the advanced charting tools. So with Smart Trader, what we're doing is almost our entire development budget goes towards advancing the platform for the trader. And it's very different than where the brokerage firms go. So most brokerage firms, their entire development budget is spent on order execution, because that's where they make their money, and that's where they get judged for success, right?
Yeah.
How fast did a trade was made? What is their latency? And we're kind of different. We focus it almost exclusively on the trader and giving the trader the tools to get the edge. And then we leverage the brokerage firm's APIs, so you can go pick what brokerage firm you want to go trade with, and you can just integrate your brokerage firm to our platform.
Yeah.
So we look at it completely different, and that's why we find that traders using our platform are more profitable than traders that are using the platforms directly, because they have more advanced tools and the edge on the market.
Yeah, no, that's a great point. I mean, I used MT4 for a while, and that's definitely not intuitive for most people, but more than honestly most. And then the crypto companies specifically have really bad tools, and I think it's actually purposefully so, because they're making most of their money on margin calls, and they're really not in it for the consumer for the most part, at least most of them that we've looked at. So, I think you've talked a little bit about starting to integrate crypto. How are you going to be doing that?
So right now on the Smart Trader platform, we have about 120 different coins on the platform. This weekend, we're adding in Coinbase's instrument offering. So we'll be adding the Coinbase feed. And then as the more popular firms continue to pop up, not the popular firms, but as firms become more credible, we'll continue. And as coins become more legitimized, we'll make sure that we put the instruments on the platform that will have longevity, that are liquid enough for people to trade, and the brokerage firms are credible and regulated, so we're not kind of engaging or exposing our customer base to any potentially bad actors out there.
Yeah, no, that's super important, because there are plenty. So when did you really first hear about crypto, and when did you decide to start investing more of your time and resources into it?
So I've probably got I heard of cryptos maybe 5 years ago, as they was kind of first coming onto the scene, and it was just something you hear in passing and not really focused or put any much brain power towards it. And then it wasn't until about 2 or 3 years ago where it started kind of kicking up more steam, and you heard a little bit more about it and the buzz about it. And I wish at that point I didn't have the hard-headed mentality like even so many people today has, that is like, this is a fad. It's it's a pump and dump. Because if I would have invested 3 years ago what I ended up investing, I would be a very, 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 very rich man today.
Yeah.
And have one of those Bitcoin billionaire success stories.
Yeah.
But it wasn't until about last year that I actually really sat down in the beginning of last year and understood and got away from kind of the blanket thought of an ingrained and an incumbent person in the markets that says, oh, that's just this thing over there. And I really started to educate myself about the legitimacy of it and really getting into what the blockchain technology was doing. And so it wasn't unfortunate until last year that I actively started to really invest into it, both as an investor in the underlying instruments like Litecoin, Ethereum, Bitcoin Cash, and then ultimately ended up moving into several different facets of the market and the crypto side. So buying the underlying instrument, buying miners and getting involved into the miner side of the business, and then ultimately with Smart Trader integrating and creating price feeds and tools to support the environment and the ecosystem around crypto trading.
So how do you think crypto might affect Forex markets? Because I know when I first started trading crypto, I traded some of it through some of my Forex brokers. They had like BTC pairs, and it seemed like for a while they tried to foray into crypto by adding some of those features because it seemed sort of intuitively that those brokers would be the first line because they were, within the currency space. Then gradually it sort of became clear that crypto was moving away from Forex. Do you think they're going to be sort of isolated for the, in the future, or do you think they'll come together?
I think ultimately they'll come together in being an incumbent firm out there like an FXCM or Forex.com or AvaTrade. I mean, the list goes on of the bigger shop of FX firms. The biggest thing that has prevented them from really stepping into the space, because I know most of their CEOs personally, is not the lack of desire or want, is because they have these existing business models. Regulation or regulation uncertainty prevents them from quickly getting into the space, and because they can't get the exposure, the regulatory exposure. So it's leaving this vacuum for these little startup firms that pop up that are unfortunately not regulated, that many of them blow up, and some of them have really become good firms out there. And so right now it's really fragmented,
Yeah.
and I think ultimately a lot of the Forex firms become kind of the catalyst of access to um, to the crypto space, because they already have the platforms, they already have the technology, they already have the same minded traders. I think FX firms are going to ultimately change a little bit of the landscape as it plays itself out, because a lot of the Forex firms, their core is based off of leverage. So coming in, I think that a lot of them will do CFD, contracts for differences, and they'll leverage up cryptos eventually, so you can have more buying power around it as volatility slows down or drops potentially on the crypto space. So I think they'll come together, and Forex firms will become a wide distributor of access to the crypto markets. But I think that it's the regulation or the uncertainty around regulation that has all prevented them from really getting into the space.
So yeah, I mean, I know the regulation is a nightmare because we built an exchange, we've got it sitting there, but just sitting there, we can't put it up. So yeah, I understand that it's difficult for a lot of these companies to get into it right now, especially because you just really don't know how badly they'll come after you should you cross them. I was gonna ask what leverage you think is really the maximum you think people should be trading on, because you have a lot of sites that are offering, like you said, 50 to 1. What do you trade at? What do you think people should stay within the bounds of?
On the Forex side or on the
Forex side, sorry.
yeah, so about 5 years ago, or actually probably longer than that now, about 8 years ago, leverage in the space was 200 to 1 in the U.S. and 400 to 1
I remember that.
internationally.
Yep, I did a couple of those trades. It didn't last long.
And since then, the regulations have changed here in the States that have changed it to 50 to 1, and overseas, the norm is about 100 to 1, 200 to 1. the Swiss franc debacle kind of changed that around. So some are higher, some are lower. But I'm a personal, my belief is just because you have the buying power doesn't mean you should use all the buying power.
Yeah.
And it's really one of the number one reasons currency traders or people who are trying to become currency traders aren't successful is because they over leverage themselves. They're looking for that home run every single trade. They're trying to take a $5,000 account to $25,000 in a single trade, and they use leverage to their own detriment, and use it, and they're irresponsible with it. Me personally, I'm more of a 5-to-1 type of. No, I'd say that's about the leverage that I'll use: 3-to-1, 5-to-1, sometimes a little bit more than that. But I mean, there's plenty of money at these reduced levels than it is to need to ratchet it all the way up.
And so, do you have sort of a similar thinking with crypto, or do you change the calculus significantly because of certain volatility?
So crypto's a bit different because most of the ways you buy into crypto isn't on a leverage basis.
Yeah, yeah.
So I think you have to go into cryptos with a little different mindset of how much of your portfolio it is and what your risk tolerance is, because the swings are quite wild. I mean, 2 weeks ago we were at 9,800 of Bitcoin, and today we're close to 85 or so, wherever it is right now. So as a trader on the crypto space, I think you need to either be in and out very quickly or have some long-term positions or views and enable you to ride out some of these storms. I'd say if you don't have the kind of stomach for 20% swings, the crypto space isn't for you.
Yeah, and I would say be really careful in the crypto space who you're margin trading with, because I've margin traded with several brokers, and they have all the call logs in their back end, and a lot of times they'll just purposefully hit some of those call levels in the middle of the night, just to wipe out accounts, especially the sketchy ones.
Yeah,
So
I mean, I wouldn't recommend that really on the crypto side.
Yeah.
That you use, any leverage at all. It's
unnecessary.
It's unnecessary at the current level of volatilities. I think as the crypto space goes through its evolution, like the Forex market did, I mean, there's going to be some more pain in the space of these altcoins, from my personal belief, that go worthless. Then you're going to have lots of volatility followed by regulation, then followed by kind of non-volatile, and where cryptos kind of level themselves out, and then financial firms will come in there and leverage it back up. So then you can trade it leveraged, make the same type of money you can make today, but your market movement is less.
Yeah. So this is something I've been just sort of curious about. Since you have more of a background in the financial sector, do you think cryptos are going to move more towards the traditional financial sectors or more towards the tech sectors?
What do you mean by that?
So I guess, do you think Google is going to start, buying out crypto companies and adding cryptocurrencies to their ecosystem, or is Goldman going to be the one to go and do it, or FXCM? Because it seems like it exists sort of at the intersection of these two, massive industries that seem to be competing in some way at this point.
I think the tech firms are gonna, and they're already doing it, from IBM to Deloitte and anything in between, are going to go at it from a technology perspective, and they're going after blockchain and how to apply that to everything, right? Blockchain's being used to track diamonds. It's used to track inventory. The banks are trying to say, how do we get rid of SWIFT using blockchains, and instead of these daily settlements that they do right now. And so blockchain, I think, is going to overhaul everything and be the killer of so many things that happen, all the way to being able to, I think just a few months ago, you just had the first real estate transaction that happened through a blockchain.
Yeah.
And so you're going to get rid of title companies. And blockchain will continue to revolutionize the world in ways I don't think we've ever even have our mind wrapped around it over the next 10, 15 years. I think the brokerage firms, And the financial side are going to go after the asset class, like Goldman Sachs, like the FXCMs, the Forex.coms, the bigger institutional money that will come into the space. When these bigger companies like Goldman step into it, Goldman doesn't go chase a fad. They go
Yeah.
and turn around and say, this instrument is here to stay. We're going to go put hundreds of millions or billions of dollars to go spin up a shop and an opportunity to go make tens of billions of dollars, because there's no point for Goldman to getting into the crypto space for 10, 20, 30 million dollars. It doesn't move their needle.
Yeah.
They're going after opportunities that are billions of dollars, and so clearly they see the crypto space as billions of dollars worth of opportunity.
Yeah, yeah, and I mean, the more money that pours in, the higher prices will go at the end of the day, because there's not that many places for it to go, I think. So ultimately, I think it's going to be good for the industry, and I think people are seeing the lull right now because everyone is positioning, and soon enough, things are going to start taking off. You talked a little bit about how you own miners, is that correct?
Yeah.
Yeah, so how did you decide to get into that? Why did you decide to do that instead of just holding the asset class itself?
The real, I guess, like probably most people that get into different businesses, I saw the money making opportunity. Money
Yeah.
is probably what drove me into it. How I got into the mining side of the business is my brother actually owned, I believe, 8 S9s,
Yep.
and I was doing the math of the profitability and return on asset that he was getting on the 8 S9s. And so I guess the entrepreneur in me took the number, crunched it into a spreadsheet, and said, at scale, there's some great money to be made here. So after turning around and looking at the business side of it, I went out and bought 550-ish miners, and then started the. Not, I actually probably did it. I understood the viability of the business. I didn't know how I was going to and where I was going to set them up.
Yeah.
But I knew if I went and spent the money to go buy the mining equipment, that I would work the logistics out, because I'm relatively technically savvy, and logistics are the easier side of what I do. So between purchasing and the equipment arriving, I was able to work out all the logistics of how to support and ultimately deploy miners, and start the process of getting the return on investment.
And so has it been pretty good so far? Because I mean, the returns really are pretty spectacular when you're looking at it from a traditional financial background and you see the numbers. I mean, have they lived up to expectation for the most part?
Yeah, there's been a little more complications than nothing's ever as easy as you think
Yeah.
it is,
Yeah. Oh
right?
yeah. No.
It's always takes twice as hard, and takes twice as much money, and twice the problems you ever think you're gonna ever possibly get into it. I think the things that have been kind of the most disappointing is in the equipment itself. That's just the notorious, like, Bitmain, where I got my equipment from. You buy 500 plus machines. So many of them are dead on arrival. So many of them have dropped off over time. So it's been a whole lot more maintenance intensive
Yeah.
to servicing all the equipment as you put it online than I thought it was going to be initially. So I wish there was the equipment was more reliable than what it is out there. Difficulty has risen exponentially, but it's just part of the game of what you get into on the mining side. And I think the one thing the biggest advice I'd give other people trying to get into the mining space at any sort of scale is due diligence, due diligence, due diligence, because there are so many predators and bad actors in the mining space that are looking to
Yeah.
take advantage of people that don't know any better. And fortunately, I was able to avoid a lot of those people that will try to scam you on the buying and acquisition of machines, to trying to get you to ship your machines to them to mine and only to have them take over your machines. I mean, the horror stories that I have heard, it's been horrendous. And then even the legitimate companies will prey on the ignorance of people and try to get people to lock themselves up with power rates that will never allow them to get the return on value. And they're doing it purely for the reason that they put somebody into a 2-year contract at paying $150, $200 a month in power per machine, and then all they're going to do is wait for you to default, and they're going to take your machines away from you. And they're going to start mining themselves for at cheaper rates. So it's been an interesting world to get into. It's slightly more challenging than I anticipated. There's a lot of, like I said, bad actors trying to take advantage of you. But if you can navigate through that, it's a great business to be in.
Yeah, no, that's why we're trying to put out miners of our own, trying to simplify it, because it really is, especially when you get to the mining pools, and there is a lot of setup required, and I think it's too bad, because I think mining really is the easiest way for people to get into crypto if it's done right. It's essentially printing money. It's such a cool idea that you can plug a box into your wall and print money, but I think no one has really done it well enough to make it accessible to people, especially, I think, interestingly, the altcoins, which, I agree, most of them will not be here for long, but a lot of them, people are hearing this and that, and it's like penny stocks to a point, but instead of having people, putting in money and buying them on these exchanges and them sitting there until they get stolen or who knows what, because my mom has, 10 brokerage accounts because each one has different random coins and no two has the right ones that you want. But the great thing about mining for altcoins is, you can essentially mine all of them. You can, set your machine to just mine you a large basket of a bunch of the ones you want and let them sit there and see if any of them pay off in the long run.
Yeah, I mean, there's a variety of different ways, and I kind of looked at mining very similar to how you looked at it. I can go put $1 million in buying the underlying asset, or I can go put $1 million into an asset that is going to generate the coin for me, and then still have the equipment value, and that's ultimately what I decided to do.
So, are there any big changes you think the crypto market will have? I guess on Forex, finance, the economy in general in the next, 5 to 10 years? What do you think will play out going forward?
So I think long term, the crypto markets are going to probably take about 5 years to shake themselves out, where you'll have a handful of coins that will be the standard and will be very difficult for any one new alt to bubble up as the coins become the incumbent. I think the coins have the ability over the next 5 years to become more like a dollar and the stability of their exchange rates, and really for the coins to become what everyone wants them to be, or a lot of the coins are trying to advertise themselves to become. In order for them to become transactional and become part of the economy and let them become used for commerce, they need to stabilize, right? You don't have the U.S. dollar going through 20% swings in a week, because if you were to go buy, transfer $100,000 and it could be worth $80,000 or $120,000, nobody wants that risk. So we need to ultimately get to a place, and I think it will take about 5 years, 7 years for it to do so, to have the coins stable out, become regulated, set kind of the standard around them, and then they can start to be used for their intended purposes, which is now for commerce, and start to become tradable as far as for buying actual materials and goods. I think along that way there's going to be plenty of people that are looking at it not from a commerce perspective, but like Bitcoin, who gets often compared to gold and is like the gold standard. People are going to buy and hold and sit on them as an investment, with long-term, views of where they go. So there'll be a mix and match, I think, over the next 5 years. I think more than anything, the cryptos are going to respond, and like Bitcoin are going to respond to the markets and not necessarily influence the market. So the way I kind of look at it, if the stock market rallies, that's great for cryptos. If the stock market has a horrendous crash, it will initially be bad for cryptos, why people want to go more liquid, but it also then cryptos becomes a more legitimate vehicle of where to put money to have transactions. So I think things like Bitcoin, Ethereum are in great places from a long-term perspective. It's just going to take some time for everything to shake itself out.
Do you see international business moving more towards crypto as, just transaction fees get lower and it becomes cheaper than, exchanging currencies or dealing with all the intermediaries?
I think it depends. Like the biggest step for that to happen is the volatility around cryptos, and the market movement has to slow down a little bit because the risks become too high for companies to use it for commerce. I think over time it has a huge potential for these instruments to be used to transfer around for anything. I mean, it's just really easy. There's no exchange rate per se to it when you're sending money from this place to that place.
Yeah, exactly. I mean, it can be, I think, they recently had, I think it was a Litecoin transaction. Someone sent something like 100 million for like $10. It's like ridiculous how cheap the transactions are compared
Not
to
only
a
that,
lot
but
of
speed.
alternatives.
Yeah.
Yeah,
So I mean, it was very cheap, and it happened in seconds.
yeah, exactly. So, I think going forward, that's going to be really interesting. And so, I don't know if there's anything else you really wanted to touch on. I think that's all I have here. But are there any other topics you wanted to touch on quickly?
No, I think and I think you touched on everything that I would have touched on. It was a great conversation. I guess I would say for anybody that wants to get more access to the marketplace and look at both cryptos, Forex, and stocks from a singular platform, go to smarttrader.com. It's a free platform to use. You don't need to subscribe or pay anything to engage with the platform and to look at the various markets, news, research. And thank you for having me on.
Yeah, anytime. And yeah, I mean, I love the platform. It's super, the UI and UX is super beautiful, which is something Forex companies or Forex-based companies never do well. So I really appreciate the time you've put into making it look neat and nice for everyone. And I've just started using it and I really like it. So I want to thank everyone for listening. I know we're going to be having a bunch of podcasts posted these next couple weeks, so we're excited. And I want to thank you for coming on, Isaac, and we'll see you guys next time.
Thank you. Take care.
Yeah.